Okay. Good morning, friends. Good morning, friends. Okay, so we'll start now. So as far as your revision is concerned, we are going to do it over a span of 3 days. 2 days would be dedicated for old and new put together, or it could be even 1.5 days only. 1.5 or maximum 2 days for new syllabus and old syllabus put together. The last day would be exclusively for old syllabus. As far as old syllabus is concerned, we will have a coverage of around 80 to 90%. New syllabus, the coverage would be only around 60% types, because case studies and other areas will not be covered during the classes. So I'll give you certain notes for covering those, but during the revision classes, we are not going to cover the theory side of it. And in new syllabus, the theory side of it has weightage of around 30 to 40 marks. So there is a weightage as far as the case studies and the other parts are concerned in new syllabus. So that part of it we may not see during the revision classes. So today we'll first start with something called as relevant costing. Now, relevant costing becomes the basis for any decision making, be it when you do in SFM something called as capital budgeting, or even in costing when you try to calculate the cost. The basis becomes something called as relevant costing. So based on relevant costing, I think I've run out of books. I'll give it to you after the class. Now, coming to relevant costing, let's first understand how relevant costing will work. See, as a rule, what happens is, I have something called as a decision, and I'll have to split this into two. Yes, no. Any decision which we are taking, we'll have to split that into two parts, yes and a no. And depending on the answer to the yes and a no, you will get to know whether something is relevant or something is irrelevant. That's the general norm to analyze anything. For example, I'm going to set up a factory. When I'm setting up a factory, I want to do a market survey for the factory. The market survey is done, the report has come to me. After the report comes in, I need to decide whether to go ahead with this project or not. If I go ahead with the project, I have to pay for the market survey. If I don't go ahead with the project, still I'll have to pay for the market survey. So the market survey expense, I told someone to do a market survey for me. He did the market survey. Based on the market survey, I'm going to decide whether to set up the project or not. When I'm making that decision whether to set up a project or not, the survey results have already come in. If I decide not to do the project, I cannot tell the other person that I will not pay for the market survey, because I am not going to take up the project. Whether I do the project or not, I will have to pay for the market survey expense. In this case, this will become an irrelevant cost, or technically a sunk cost. It becomes an irrelevant cost, or technically it's called a sunk cost, because you have already incurred for it. So basic rule is very simple. To decide whether something is relevant or irrelevant, the only question which you need to ask yourself is, if you do the project, what happens? If you don't do the project, what happens? If you manufacture the product, what happens? If you don't manufacture the product, what happens? So you will have to do technically something called as a yes or no analysis. And if your answer is same for yes as well as no, if the answer remains same for both the parts, it becomes an irrelevant cost. That's the general norm to decide whether something is relevant or something is irrelevant. Now, I have certain extra parts to it. I have run out of books, so you just manage books, one for every two, just manage books like that. I'll tell them to print it extra. We had seen earlier some registration, based on that we printed. Last few days extra registrations have come in, so manage books one for every two as of now. So just somehow manage it for today's class. I'll get it printed extra books maybe by next class. Now, the first thing which we see is material. The first part is relevant cost of material. Have the focus on understanding the concept. I'm trying to record this as well. I'll try to give it to you. So don't focus on copying it from the board. Understand it. Importance would be understanding the concept rather than just copying whatever I've been doing here. First thing is relevant cost of material. In relevant cost of material, I ask two questions. The first question is material in stock, material out of stock. Whether the material is in stock or whether the material is out of stock. So I need some raw material. Do I have the raw material or I don't have the raw material? If you don't have the raw material, you will have to buy it. The relevant cost is current purchase price / replacement cost. You will have to go ahead and buy this material because it's not in stock. So the relevant cost becomes current purchase price or replacement cost. If you have material in stock, it could be two things: fast moving, slow moving. Fast moving is a regularly used material, slow moving is irregularly used material. If it's a fast moving material, again it is current purchase price or replacement cost. The logic is, in case you use a fast moving material, you will have to buy that fast moving material again. You will have to buy it again and the purchase will happen at the current purchase price. So if it's a material in stock and it's a fast moving material, again it becomes current purchase price / replacement cost. If it's a slow moving material, there can be multiple usage to the slow moving material. Sometimes you will dispose of this material. You don't have any use to it, you can dispose of this material. If you are planning to dispose of this material, then it becomes realizable value. If you are planning to dispose of the material, it becomes realizable value. In case it can be used as a substitute, then it becomes cost of substitute. And if you have both options, so I'll just summarize it. I want 1000 kg of raw material. I can either have it in stock or I may not have it in stock. If I don't have in stock, go ahead and buy it, current purchase price or replacement cost. If you have in stock, it could be a fast moving material or it could be a slow moving material. At my home, rice is a fast moving material. It is consumed on an everyday basis. So in case somebody wants to take some kilogram of rice from the stock, he has to replace it again. So if it's a fast moving material, it becomes current purchase price or replacement cost. In case it's a slow moving material, I have three uses to the rice. I can dispose of the rice. When I say dispose of, I can sell it off, then it's a realizable value. I can use rice as a substitute for some other product, then it's a cost of the substitute. Sometimes both options will be available. That is, you can use it as a substitute, you can also dispose of. Then I will choose which is the better of the lot. I'll choose which is the better of the lot, and the relevant cost becomes, if both are possible, higher of 2. These are the only scenarios as far as material is concerned, except this can be one more scenario which I'll explain with the problem. So when it comes to material, my first question is, do you have it in stock or not in stock? Depending on the answer, you move forward. If you don't have stock, replacement cost. If you have stock, the next question is it a fast moving material or a slow moving material? Depending on the answer, again you ask your next set of question. If it's a fast moving, problem ends there. If it's a slow moving, then the next question is, can it be sold off? Can it be used as a substitute? Or both options are possible? And depending on that answer, you get to the final solution. Then comes labor. First question remains same. Labor available, not available. Whether the labor is available or not available. If not available, problem ends there. You recruit them. So wages payable is the relevant cost. If you don't have, recruit them and pay them wages. So if you don't have it's technically not available means replacement cost. Replacement cost is basically you will have to recruit them and pay them wages. If they are available, they can fall under two scenarios: busy, idle. Either the workforce is busy or the workforce is idle. I want to do a new audit. For that audit, I need few article assistant, I need few audit managers. Either in my audit firm, they could be busy with some work or they could be idle. So depending on that, I go to the next part. If they are idle, I have two scenarios: can be terminated, cannot be terminated. We have two scenarios: can be terminated and cannot be terminated. That is, you have got a new job, you need this article assistant and audit managers. You get to know that they are not having any work for the time being. And the scenario is this: these people can never be terminated. You cannot tell them to go out. In that case, relevant cost is 0, because you are not incurring anything extra for the audit manager or the article assistant if you decide them that these people can never be terminated. If they can be terminated, then relevant cost is wages payable. The relevant cost is wages payable. The logic for that is, in case I decide that I don't take up this job, I'll tell these audit managers to go out of the firm. If they go out of the firm, I save that wages, and if they are retained in the firm, I have to pay them wages, I have to pay them salaries. So in case of a labor scenario, you will have, first thing is whether labor is available, not available. If they are not available, relevant cost is wages payable, it ends there. If they are available, they can be in the busy scenario, they can be in the idle scenario. If they are idle scenario, you have to ask them one question: can you terminate them or you cannot terminate them? Depends. Lot of places, if the problem is silent, you cannot terminate them. If the problem becomes silent, you cannot terminate them. So in case I have article assistants and audit managers who are not having any work, and if I pick up an audit, the relevant cost of salary is 0. Technically the relevant cost of salary is 0, because anyway I have to pay salaries to the people who are already recruited and there in the firm. So that job which comes in, technically if I have to do from a relevant costing point of view, the relevant cost of salaries paid to these set of people is 0. But if you are in a scenario saying that you can terminate them, if they can be terminated, then the relevant cost is salaries payable or wages payable. If they are busy, two scenario, can be substituted, cannot be substituted. You will have two scenarios: can be substituted and cannot. In case you want to make these notes later on, you copy it from the video. For the time being, just focus on understanding the concept. You will not get the time to note, that's the problem. Can be substituted and cannot be substituted. If I need audit managers, they are working on some other audit, but the issue is I need this audit only to be done by audit manager A. He is the only capable person who can do this audit. Now if that's the scenario and is already working on some other audit, and I get to know that this person is someone who can never be replaced, then if you cannot substitute them, then opportunity cost is the relevant, because he is already working on something else. I'll tell them, boss, you close that audit, we come out of that engagement and you come to a new audit. So when I have to move him away from one audit to the other audit, my relevant cost is opportunity cost or lost contribution. Technically it's the lost contribution plus, sometimes you will add wages, sometimes you will not add. I'll explain this. It's lost contribution plus wages payable. And if these are the people who can be substituted, if you know that these are the people who can be substituted, then relevant cost is cost of substitute. Then relevant cost is cost of substitute. So I'll summarize it again. From a labor point of view, you need 4 audit managers or 2 audit managers to work on an audit engagement. An audit comes in, you find that such people do not exist in the firm, recruit them, pay them salaries, that's the relevant cost. Yes means it's always same thing. Yes, recruit the people. No, don't recruit the people. Relevant cost is wages payable. In case they are available and you cannot terminate them, yes, take the job and tell people to do the job, pay salaries. No means don't take the job. People will remain idle but pay salaries. People will remain idle, pay salaries. So salaries will be paid in both the yes and no scenario. It becomes an irrelevant cost. Net, it goes to the same thing. Yes means what happens, no means what happens. That's how I've written all the thing. If any scenario you are going to analyze, net, it is going to be in yes scenario what happens, in no scenario what happens, and then you get to the answer. Clear? Any doubts on this? So I get to know an audit comes in, people are available, not available, recruit, pay them salaries. Available, they are busy, they are idle. If they are idle, next question is, can you terminate them or you cannot terminate them? If you cannot terminate them, relevant cost is 0. If you can terminate them, relevant cost is wages payable. If they are busy, the next question is whether can you substitute them or you cannot substitute them. If you can substitute them, cost of the substitute. If you cannot substitute them, there is no substitute available for this person, relevant cost is lost contribution plus wages payable in certain scenarios. I'll explain that as we proceed to a problem. This is what we will do. Apart from this, there is relevant cost of overheads. Every item you analyze on a relevant costing, the only question which should go to your mind is, if you do the decision, what is decision you define? The decision could be to produce 500 units, the decision could be to go on a trip, the decision could be multiple things. So once you are done with what is the decision in hand, after that you will have to think a yes or a no. A classic example of irrelevant costing is, if you have bought a movie ticket for 200 rupees, the moment the movie ticket is bought, the ticket comes to you. After that, the relevant cost of movie ticket is 0. The relevant cost of movie ticket is 0. That is, you are not able to go for the movie and you want to sell it to someone. If you decide to sell, extra cost for movie ticket is 0. If you don't decide to sell, the extra cost for movie ticket is 0. Before buying the movie ticket, the value of the movie ticket is 200. The moment you buy the movie ticket, the value of the movie ticket becomes 0. Technically it becomes 0, because in case you are not able to go for the movie, the relevant cost becomes 0. Now whether to sell, not to sell, at what price, that's a choice of the person, but technically from a relevant costing point of view, the moment the ticket is booked, the relevant cost becomes 0, because I don't have a cancellation choice there. I don't have a choice of a cancellation there. If I have a choice of cancellation, the relevant cost is the value of the cancellation. But in case of a movie ticket, that option would not exist. Clear? Any doubts on this? So with this, we'll start seeing problems now. We'll see question number 1, which is in page 84. Some of you may not have the workbook, so just share one between two. Just share workbook. Page 84. Page 84. Okay, let's start with this question 1. A company has decided to launch a new product X, which is expected to have demand of 10,000 units at 160 per unit. Following information is furnished: material, labor, variable overhead, fixed cost. Using relevant cost approach, you are required to find out the average variable cost per unit of X. So I am required to find out the relevant cost of this. The focus would be on the, I'll explain the concept, but I'll not dictate the concept, because normally I give a lot of notes on relevant costing. I'll tell you the concept. You can pick it up in the class. In case you miss out on certain concepts, you can view the recording later on. So working note 1, computation of relevant cost. Working note 1, computation of relevant cost. Particulars calculation amount. Particulars calculation amount. Computation of relevant cost. Particulars calculation amount. We'll go item by item. So I need to manufacture how many units? 10,000 units, and I need 1 unit of the manufacture of 1 unit of request, 1 unit of each raw material. Technically I need 10,000 of A, 10,000 of B, and 10,000 of C. Is material A in stock, out of stock? In stock. If it is in stock, the next question is it a fast moving material or a slow moving material? Is it a fast moving or slow moving? Fast moving. If it's a fast moving, the relevant cost is current purchase price or the replacement cost. So material A, 10,000 into 20. Material A, 10,000 into 20. 10,000 into 20. Next, material B. Now, do we have the material B in stock? It's partly in stock, partly out of stock. For 4,000 units which is out of stock, it's 24 rupees. For units which are out of stock, it's going to be 24 rupees, which is the current purchase price. For material which is in stock, the next question is it a fast moving material or a slow moving material? What is the scenario? Slow moving material. In slow moving, they have given this resale value. Sometimes they'll give you extra data point on substitute cost and all. Here they have given the resale value. So for 6,000 units which is in stock, the value is only 8 rupees, and for 4,000 units which you will buy, the value is 24. For 4,000 which you are going to buy, the value is 24, and for material which is in stock, the value is only 8 rupees. Any doubts on this? So material B, 6,000 into 8 plus 4,000. Now in an exam scenario, you may have to give an explanation to this, saying that in stock, out of stock, what does in stock you have analyzed. So that explanation has to flow in. 6,000 into 8 plus 4,000 into 24, 1,44,000. Any doubts on this? Material C, what's the scenario? It is fully not in stock, so current purchase price becomes the relevant. They have not even given the other price because I don't have that material in stock. So 10,000 into 48. 10,000 into 48, 4,80,000. 10,000 into 48, 4,80,000. Any doubts on this? Clear? Now let's come to labor. First write skilled labor. Then we'll analyze what is there in the skilled labor scenario. Skilled labor is paid at 80 per hour. It takes 0.25 hours per unit. It has to be skilled labor has to be drawn from another production line which has a contribution of 240 per unit, with each unit requiring. Okay, I get to know that skilled labor has to be drawn from another production line. That is, I have to take these people from another audit and tell them to work on this audit. When I take people from another audit, I'll lose the revenues of the other audit which is going on. In the other audit, I'm earning 240 rupees for every 2 hours. I'm earning 240 rupees for every 2 hours. So technically, I'm been earning 120 for 1 hour. Now listen. When you calculate this contribution of 240, you should not be deducting this labor cost. You should not be deducting this labor cost. That's the rule. If you have deducted this labor cost when you calculated the contribution, then the relevant cost is 120 plus wages payable. If you have deducted, add it back. If you have not deducted, don't add it back. That's the logic. Why do we say that is? The 240 is what they are earning. This 240, yes, no. In the no scenario, these guys are earning 240. That 240 could be 400 rupees of sales and 160 rupees of variable cost, which does not include the labor, If they are earning that 240, when I come to this audit, I would want them to earn the same 240. Without considering the concept of labor cost, because labor is something which is going to be paid in both the scenario, But unfortunately, sometimes when they give the contribution, they'll deduct the labor and give, because the term contribution is normally deducting all variable costs. So here it is not very clear. So I can write my assumption that the 240 rupees, basically labor is adding a value of whether 240 or 320 is what you have to see. If you have already deducted that labor cost, then they are adding a value of 320 because they earn 320, their cost is 80 and you earn 240 as the net amount. If they are earning 320 there, when they do in my job, here also they should earn 320. So if you have already deducted the labor cost, then add it back. If you have not deducted the labor cost, then you need not add it back. Here it's not very clear. Some problem will say the labor is working on some other job, selling price is 400, variable cost excluding labor, they will not bring the labor itself into analysis, excluding labor is 160, then they are earning 400, other expenses are 160, so net they are earning only 240. If labor is included in that 160, then they are not earning 240, they are earning 320. So that will depend on the assumption you take. My assumption could be that this 240 is post deducting this 80, 240 is without deducting 80. Both assumptions are fine. You will have to clearly write what is your assumption. In this case, I assume that this is without deducting that 80, sorry, after deducting that 80. So this 80 has been deducted while doing this calculation of 240. If you have deducted lost contribution plus wages payable is the logic I said. When do you add it back? If you have deducted it. If you have not deducted it, no need to add it back. It's very simple. If you have deducted, add it back. If you have not deducted, let's not worry about it. So this number is going to be 240 divided by 2. 120 rupees per hour is the value of 1 hour. Is the value of skilled labor. Now this product requires how many labor? 0.25. So the value is 160. 320 is the relevant cost because I'm adding back that 80. 240 plus 80, 320 divided by 2 hours, I get 160 per hour into 160 per hour into 0.25 into 10,000 units. 160 into 0.25 into 10,000. Run out of material, just manage with someone. I'll tell them to print extra. 160 into 0.25 into 10,000. Which one? $240? No, so 80 is per hour, no? Okay, sorry, yes. Sorry, I made a small mistake. This 240 is per unit. So it is 240 plus 80 means 160 I'll have to add back. I'll have to add back 160 because 240 is for 2 hours, 80 is for 1 hour. 240 plus 80 can't be added. So 240 plus 160, 400 rupees is the relevant cost for 2 hours of labor. 400 rupees is the relevant cost for 2 hours of labor. 240 is what you earn at a per unit level. Apart from that 240, 2 hours of labor will take 160. So I add back that 160. I get to 400. My assumption is this labor cost has been deducted. If you take an alternate assumption that labor has not been deducted, then I could have continued it at 120 itself. So this number is going to be 400 by 2 into 0.25 into 10,000. Analyze that unskilled labor and tell me what it will be. It's a very simple adjustment. Unskilled labor. You need some 2 hours at 56. What will be the relevant cost of unskilled labor? Labor is abundant, labor is available, but as per an agreement with trade union, no unskilled labor can be retrenched. That line itself is not needed because general understanding is you cannot terminate employees. So in this case also the relevant cost is 0. The unskilled labor will turn out to be 0. Variable overhead, fixed overhead, variable overhead and fixed overhead. Okay, as a general norm in costing, all variable costs are relevant unless provided otherwise. All fixed costs are irrelevant unless provided otherwise. So if I don't have any extra information, all variable costs are relevant, all fixed costs are irrelevant. That's the rule of the costing. If you give me extra information, a variable can become irrelevant, a fixed can also become relevant. So in this case 10 per unit, so 10 into 10,000, 10 into 10,000, that's variable overhead. Variable overhead is 10 into 10,000. Fixed overhead, they have not mentioned anything. In fact, they have said no increase. listen, if they say fixed cost is going to increase by some number, that becomes a relevant cost because that's an additional cost. If they had mentioned fixed cost 5 per unit, I would have written a 0. If they had mentioned fixed cost as 5 per unit, we will end up writing it as 0, and you will write a note saying that it is assumed that it is a committed fixed cost and hence irrelevant. General, the rent which I pay for this building, whether I take classes or not take classes, I'll have to continue pay the rent, so it becomes an irrelevant cost. The faculty cost becomes a relevant cost because that is incurred only when the classes are taken. So all fixed costs by rule are considered to be irrelevant. So fixed overhead is 0. That's all. Total cost, number of units and cost per unit. Let's not worry much on the computation front. Understand the concepts behind the calculation. So net the relevant is 142.4. The relevant number is 142.4. Any doubts on this? Let's look at question number 3. A company has to decide whether to accept a special order or not for a certain product, M, in respect of which the following information is given. Okay, I'm going to take up an order. I need so many things for the order. Material A 5000 kg. Read that information and tell me what will be the relevant value of this 5000 kg. 5000 into what? 5000 I should multiply with what number? In stock, out of stock? Fast moving, slow moving? Slow moving, I'll sell it off for 15 rupees. So material A 5000 into 15, 75,000. Material A 5000 into 15, 75,000. Material A 5000 into 15, 75,000 into 15, 75,000. Material B 8000 into 25. Material B 8000 into 25. You can keep writing it. I'm not doing it in the board, so let me know if there's a doubt. 5000 into 15 is material A. Material B is 8000 into 25. Other hardware items 10,000 to be incurred. Other hardware items to be incurred is 10,000. To be incurred is 10,000. To be incurred is 10,000. Let me know if you have a doubt. Department X labor. Read it and let me know the final number. Labor to be freshly hired, no spare capacity available. That's the best scenario. I don't have labor, I recruit them and I pay them. So the relevant cost for department X is 5 into 1 into 7,000. 5 into 1 into 7,000. Any doubts on that? Department Y. They are saying existing spare capacity may be used. This is machine, not even labor. So I cannot say that whether terminate, you cannot terminate. There's no concept of termination of a manufacturing capacity. I basically, if I take up this project, I will use 3000 machine hours. If I don't take up the project, the machine will remain idle. Net, I'm not going to incur anything. Only rule which happens is if they give a split of this 5 saying that variable is 2 and fixed is 3. If they give you this breakup, if you take up the project, use 3000 hours and incur 3000 into 2 variable cost. If you don't take up the project, you will not use the machine and incur 0. If the breakup was available, the 2 rupees would have become relevant and 3 rupees would have become irrelevant. Of that 5, if there was some variable component, then that number is relevant. Listen, even in case of machine, they can say something saying that then machine is normally outsourced to an other company at 4 rupees per hour or 10 rupees per hour. If you have that data, that becomes the relevant cost, because if you use machine for your job, you will lose the opportunity of outsourcing. The first question is whether the machine is idle or busy. That is the question. If the machine is busy, I need to check what were we doing with the machine. Were we outsourcing it, or we were, see, basic rule is think in your mind yes and no, what will happen. Patterns and specifications. Patterns and specifications. Patterns and specifications. Read that and let me know how much would be relevant. In patterns and specifications, how? If you do the project, 15,000. If you don't do the project, okay, yes, no. If I do the project, I'll incur 15,000 and then sell it for 2,000. So 13,000 is my expense. If I don't do the project, 0. If I don't do the project. Now it says patterns and specification to be incurred. Let's assume a scenario, it's already incurred. It's already incurred. If they give you a scenario saying that you have already incurred the patterns and specification, then if you do the project, you will use it for manufacturing and sell it for 2,000 in the end. If you don't do the project, you'll immediately sell it for 2,000. Net the relevant cost will become 0 if you have already incurred the patterns and specification. Some question can say, if you do this project, the patterns would be used and you will sell it for 2,000. If you don't do it, you'll immediately sell it for 7,000. You could sell it for a higher price because you are not using it for your manufacturing. Then in that case, the relevant cost is 2,000 and 7,000 comparison. 5,000 will become the relevant cost. So you will have to keep thinking about yes and no. The moment you keep thinking about yes and no, you will get to the right relevant cost. So if you do the project, 15,000 is spent, 2,000 comes back, 13,000 is the relevant cost. Any doubts on this? Any doubts? What is the overall relevant cost? 5 into 15, 75, 275, 285, 290, 320, 3,33,000. Yeah. 3,33,000 is the relevant cost. The relevant cost for this order is 3,33,000. Any doubts in this? Any doubts in this number? Can we proceed? Let's look at question number 4. Again, the focus would be on individual adjustments. I'm not really bothered about the total part which we do in the end. The focus is predominantly on the individual adjustments. Go through the question. Okay, I'm going to analyze about some research project and I have to decide should I allow this project to continue or not. I have certain expenses. Based on that, I'll have to decide whether to do this project or not. Now, relevant cost statement of the research project. Relevant cost statement of the research project. Relevant cost statement of research project. Particulars calculation amount, particulars calculation amount. Anywhere in costing or any subject where you have to do a lot of calculation, keep it as 3 columns, rather than particulars and amount. Have an in-between column called as calculation, where you can show whatever computation you are doing. First is benefits, and maybe 3-4 lines gap costs. Benefits and costs. So we are going to do a final analysis and say whether there is a benefit or a cost, and based on that we decide whether to continue with the project or not. I have incurred 2,50,000. What is the use of this information? This is a sunk cost. So in cost incurred till date, in bracket I am writing sunk cost. In case you want to give a detailed explanation to it, you will write note 1 and give the explanation. Cost incurred till date, the value is 0. It's a sunk cost. Cost incurred till date, sunk cost, value is 0. What about this 3 lakh where I'll sell it for, is that a relevant information, irrelevant information? If you do the project, you will sell it for 3 lakhs. If you don't do the project, you will not sell it. Sometimes they can say, if you continue with the project, you will sell it for 3 lakhs. If you want to sell it today, you can sell it for 1,50,000 or 1,20,000, let's assume. You can sell this project today also at 1,20,000. Then the relevant is only the beneficial 180. That extra, yes, 3 lakhs. No, 1,20,000. The extra is only 1,80,000. Today I cannot do anything with this. That's the understanding. So in benefits, you will write project revenue. I'll sell this for 3 lakhs. I'll sell this project for 3 lakhs to the government. We don't worry about the time value of money here. So it's paid after 1 year, paid today. That analysis is not brought in. Read this information on material and tell me what should be relevant for material. Okay, material available, not available? Available, but now the question is not fast moving, slow moving, all those questions will not come. They are saying it's an extremely toxic and it will have to be disposed of at a cost of 25,000. Now listen, project, yes, no, use material, zero inflow, zero outflow. Use material, zero inflow, zero outflow. If you don't use the material, dispose material by spending how much? Now in the relevant cost statement, what I do is my all outflows are written as positive, all inflows are written as negative, and the relevant cost is 0 minus 25,000. The relevant cost is negative 25. The relevant cost is negative 25,000 and not positive 25,000. In fact, the worth of that material today for me now is minus 25,000. That material value is minus 25. If somebody wants to use it, I'll be very happy. Because if somebody comes and says that I want to use this material, I'll pay you 10 rupees. I should be very happy to get it 10 rupees, because otherwise I have to incur 25,000 and use that material. The worth of that material for me is negative 25,000 at this point of time. So in this statement, in an yes or no analysis, what you do is all outflows are written as positive, all inflows are written as negative. So for example, if you can sell it off for 25,000, this would have become inflow of 25,000. 0 minus of minus 25 would have become plus 25. 0 minus of minus 25 would have become plus 25. In that case, 25,000 would become the relevant cost. Here, negative 25,000 is the relevant cost. Clear? Any doubts on this? The relevant cost in this scenario is going to be negative 25,000. So either you write it as benefit or you write it as in cost minus 25,000. Both the places you can write. I am writing it in the benefit. Saving in disposal cost, 25,000. By using this raw material, I don't lose anything. In fact, I save something. That's a tricky scenario. The scenario is that the worth of that material for me technically is negative 25. The moment I see that material, I see that I'm going to incur money on this, rather than get some money out of it. In all other places, you will use the material, sell it off for 10 rupees or use it as a substitute. But here the only tricky scenario is that material has only one use, which is disposing it off. If you dispose it off, you have to pay money rather than somebody giving you money. Any doubts on this? Read the labor part and tell me the relevant cost. If you have understood that example, this will be easy to do. There's one mistake here. This and will not come. This is 2 lakhs. Read that line and let me know what should be the relevant cost. The relevant cost for the labor part. Read that line. First, classify labor available, not available, fast moving, slow moving. Try to categorize step by step. You will get to the answer. Try to categorize them: fast moving, slow moving, available, not available. Okay, whether labor is available, not available? Available. Are they busy or idle? Busy. And somewhere I get a sense that I cannot substitute them. I cannot substitute them because they are saying they men are highly skilled and are very difficult to recruit. So the relevant cost is lost contribution plus wages payable. When you calculate contribution, if you deduct labor costs, add it back. If you don't deduct it, no need to add back. So they are earning a contribution of 2 lakh. Okay, sorry, sales is 2 lakh and your variable cost is, the prime cost is 1 lakh, and this 1 lakh does not include the labor cost. So these guys currently earn the company 2 lakh minus 1 lakh. I am not deducting fixed. See, the rule is very simple. When you calculate contribution, calculate the relevant contribution. Don't end up calculating your accounting contribution. So relevant contribution means I should not, when I say contribution, it's technically profit. I should not be deducting irrelevant items, and by rule the 60,000 is an irrelevant item. The 60,000 is an irrelevant item. The 60 can be even 90,000. Don't deduct it, don't add it back. If you deduct it, you will have to again add it back. You will have to again add it back. So 2 lakh minus 1 lakh, I get this 1 lakh. Not bother about the fixed overhead because this is a irrelevant cost. So these people are working in an audit. That audit is giving a relevant profit of 1 lakh. It's giving a relevant profit of 1 lakh. From an accounting point of view, it can be 2 lakh minus 1 lakh minus 60,000 minus 20,000. I'm not bothered about it. The relevant profit which these guys are making is 1 lakh, and that is the relevant cost of the labor. That's the relevant cost of labor. In case you deduct that 60,000, then you will have to add it back. So the question could have said, the accountant has indicated that the contract is earning a contribution of 1 lakh in bracket post deduction of labor cost of 60,000. If they are using such words, you have to add it back. If problem is silent, you make your assumption. What in this question, I don't have a confusion because they have made it very clear saying that how the figures are. It's basically yes, no, sales 2 lakh. I'm writing this as negative, all inflows are negative. You have prime cost 1 lakh, this is an outflow. Labor cost both the side 60,000, so gets cancelled. Fixed cost both the side 20,000, are both the side 0 because you are anyway going to absorb it in this job or you absorb it in some other job. Again it gets cancelled. So the relevant here is 0. The total this side is 0. The total this side is minus 1 lakh. And relevant is yes minus no. 0 minus of minus 1 lakh became plus 1 lakh. 0 minus of minus 1 lakh became plus 1 lakh. Whatever categorization I have done, all categorization is because of this yes or no analysis. Net it's because of yes or no analysis. So because I'm going to use this people in the current job, I will end up losing 1 lakh rupee of relevant profit. I'll end up losing 1 lakh rupee of relevant profit. Any doubts on this? So labor cost, in the cost, labor 1 lakh, labor is 1 lakh, labor is 1 lakh, labor is 1 lakh. Read the information on research stuff. Watch, yeah. Which one? No, it doesn't depend whether it's skilled or unskilled. You will need those people, no, whether you do the project or not. No, so these people are highly skilled, they'll be transferred some other project. So if you take up this project, these people, they will continue to be there in the company. You will transfer and tell them to work on your project, or they will continue to work on some other project. Labor is 1 lakh. Any doubts on this? What about research stuff? What do you see as the answer here? What should be the answer for research stuff? A decision has already been taken. This will be the major piece of research undertaken, and when the work gets over, you will make them redundant. Redundancy pay has been estimated at 35,000. Now listen, if you do the project, pay 60,000. If you don't do the project, 35,000. It doesn't end here. You will pay them 60, work gets over, and then pay them again 35,000. Pay them again 35,000, unless you are making an assumption that if I continue for 1 year, I will not pay them redundancy pay. If that's your alternate assumption, because either I tell them you go out of the company now, or you go out of the company after 1 year. If they go out at any point of time, whenever they are going out of the company, you have to end up paying them 35,000 of redundancy pay. You'll have to end up paying them 35,000 of redundancy pay at any stage when they go out of the company. In short, extending the stay for 1 year will not save you that 35,000. If that saves you that 35,000, then relevant is 60 minus 35. Then the relevant is 60 minus 35. If question says you will extend them for 1 year, and because of that no redundancy pay would be done. If you are not going to pay any redundancy pay, then the relevant cost is 60 minus 35. In this case, the relevant cost is 60 plus 35 minus 35. In short, this is an irrelevant information. That redundancy pay is an irrelevant information, unless you get to an understanding that because you continue with 1 more year, you need not pay redundancy charges. Or they can say redundancy pay today is estimated at 35,000. After a year, it's estimated to be 25,000. They can give you certain numbers if they want. Your thought process should only go to yes and no. Yes means visualize, you do the project, you will pay 60,000 to this guy, work will get over, you will tell them to go out. When they go out, do you need to pay them something? If your answer is yes, consider that also. So my understanding is they will work for 1 year, I pay them 60,000. After that, I'll tell them to go out. That time I'll pay them another 35,000. This is yes scenario. In the no scenario, what my understanding is, I'll tell them to go out immediately and I'll pay 35,000. 95 minus 35, 60,000 becomes relevant cost. 95 minus 35, 60. Relevant costing is nothing beyond this yes or no analysis. It's only one thing. If you are able to think through the transaction properly on the yes and no side, you will get to the answer. The only problem is you will have to visualize as if the project is going on. You will have to visualize as if the project is stopped. Think about both the scenario and then get to the answer. So this number is 60,000. Any doubts in this? 95 minus 35. Now some share of general building service. Managing director is not sure. He knows that accounts stated similar charge every year to each department. If you take up the project, 50,000 will be distributed. If you don't take up, it will be distributed to something else. It will be distributed to something else. Whether you do the project or not do the project, this general building service is of no use. Some question will say, because the managing director is not very sure what is included, all this they will give. Because of this project, the general building expense increases by 5,000 rupees. Because of this project, general building expense increases by 5,000. That extra 5,000 alone is relevant. That extra 5,000 alone will become relevant. So share of general building service 0. You will add the benefits, you will add the cost, and then get to the answer. You add the benefits, add the cost, and get to the answer. So benefits is some 3,25,000, cost is 160, net benefit is 165. Net benefit is 165. I go ahead with the project. If we just go by accounting numbers, you will end up rejecting the project, because you will first write cost incurred till date. You will write 2,50,000 as the first expense. So accounting will always not give you the right answer. That is where relevant costing comes into picture. Relevant costing is the basis for anything you analyze, any decision making, be it on the SFM side. Whenever you do capital budgeting, when you calculate cash flows, you have to think about relevant cash flows and analyze there also yes or no what happens. So it's always the basis goes back to something called as relevant costing, wherever decisions are to be made. Any doubts on this? Any doubts on this part? Can we proceed? Go through this question and you tell me the answer quickly. Question 5. Read through that question and get to the answer. Question 5. Get to the answer for question 5. This should be a minimum price, 250 rupees. The minimum price should turn out to be 250 rupees. When it comes to raw material, it's a continuation of the same earlier problem. It said the same toxic part. So the relevant cost is minus 1250. The relevant cost is minus 1250. 50. When it comes to labor, I need 250 hours and 100 hours. Labor is partly available, partly not available. That's kind of a scenario. G2, you have fully available and you have excess capacity. So relevant cost of G2 is 0. You have excess capacity. Relevant cost is 0. When it comes to G1, you need 250 hours. For 150 hours, the relevant cost is 0. For 150 hours, the relevant cost is 0. For the balance 100 hours, the relevant cost is 630 by 42 into 100. 630 by 42 into 100, because you will have to recruit them. You will have to end up recruiting them. 630 by 42 into 100. Any doubts on this? Any doubts on this part? Clear? Let's do this question. Question 6. This had come for 8 marks. We'll have to fill the table which is below there. So I'll focus more on whether it's relevant or irrelevant. We'll focus on that part. Type of cost, we'll write it, but that categorization can change based on assumption also. There are multiple categorization which are possible. Okay, first tell me this food and hotel expense 3750. Read it and let me know is relevant, irrelevant. Food and hotel expense of 3750. The CEs on marketing director food and hotel expense were incurred for a meeting with a prospective client. You have already incurred this. This is irrelevant. And type of cost you can write it is a sunk cost. It's a past cost. Sunk cost, it's irrelevant. Sunk cost, it is irrelevant. In material Z, read and tell me what is relevant there. Read that para. How much should be relevant for material Z? What should be the relevant cost for material Z? You can ask yourself the same set of questions: available, not available, fast moving, slow moving. First question is material Z available, not available? Okay, they are analyzing only for the 550 kg part. The analysis is only for the 550 kg part. The below table is just focusing on the 550. Okay, partly available, partly not available. Okay, for the not available portion, the relevant cost is 650. For which is available, let's focus only on the available part. For material which is available, is it a fast moving item or a slow moving item? Fast moving, and the relevant cost will become 650. Now listen, in the below table, 580 is irrelevant and 650 is relevant. 580 is irrelevant number. You can call this as historical cost and this as replacement cost. I can change the category also because different names can be given to it. I am calling it as historical cost and replacement cost. 580 is my historical purchase price, doesn't really matter at this point of time, and the number of 650 which is there, that 650 becomes a relevant number. Any doubts on this? Okay, let's focus on filling this. The categorization is fine. You tell me of this 3.1 and 3.2 and 4.1 and 4.2 which is relevant, which is irrelevant. Read it fully and let me know which is relevant, which is irrelevant. Categorization I'll tell you. okay, I need some engineer, I have to pay him a monthly salary of 47,500. He can work for, but I need only 90 hours of engineer's time. Spare time is not available now and I have to recruit an engineer for this purpose. He cannot be used in any other project once we do this project. If you do the project, you need one engineer, you have to pay him 47,500. If you don't do the project, you will not recruit the engineer and you are not going to pay him anything. Whether he works for 90 hours or 150 hours is not my worry, because I have to recruit him for 1 month. So the moment I recruit the engineer, I will have to pay him 47,500. In fact, if you need engineer for only 1 hour, then also the relevant cost is 47,500. Because I don't have people available in the company, there should be some idle person. I don't see anybody idle in the company. So technically, even if you need him for 1 hour, then also the relevant cost is 47,500. So 47,500 is relevant. This is irrelevant. This is irrelevant. I'll call this as committed fixed cost. Whether I use them or I don't use them, I will have to pay them this money, 60 by 150 into 47,500. Whether I use them or I don't use them, I have to pay this amount, and this is technically avoidable fixed cost. We can have some other categorization also. Why I call it as avoidable is, if I want, I can avoid the entire 47,500. But I cannot avoid the 60 by 150 into 47,500. Either you avoid entire 47,500 or you either incur 47,500 or incur 0. There is no concept of in between expense. So by rule, all avoidable costs are relevant and all committed costs are irrelevant. So that 60 by 150 is something which you can't do anything with that. You have to pay that money. You cannot avoid that expense itself. So that 60 by 150 into 47,500 is something which is unavoidable in nature. What should be the relevant cost of design? Reading this para. What should be the relevant cost of design? 0, 30,000, 50,000. It is going to be, if you do the project, you will use this design in your project and you are not going to have any inflow or any outflow. The revenue is a separate item because we write that as a benefit. If you do the project, because of design, you are not going to incur anything, you are not going to receive anything. If you don't do the project, you will sell the design for 50,000. So yes means 0, no means minus 50,000. 0 minus of minus 50 became plus 50. So this 30,000 is sunk, irrelevant. This is opportunity and relevant. This is an opportunity cost because this is something which you are going to miss out in case you decide to continue with this project. In case you decide to continue, we are going to miss this 50,000 rupees. Any doubts on this? So the basic rule is, think about the yes and no and you will get to the answer whether it is a relevant or irrelevant. We had only this many problems from an exam point of view. I'll go to the next area. So relevant costing is an extremely important area, whether from an exam point of view or not, but anywhere you make a decision, you should go and think only about relevant costing. Your thinking should be only on the relevant costing to decide whether to do a project or not. Just give me a minute. Okay, now listen. The book has been arranged in such a way that there will be something called as a summary of adjustment section. Some problems which I am now going to discuss because we will do only 50% of the question. So if something is not getting discussed in the class, you will try that at home. In case you are not able to proceed forward, you can come and look at this table. This will tell you how to proceed with the question. For example, in question number 1, I have written material A in bracket replacement cost, material B resale value, material C replacement cost. Similarly, some explanation for material cost. This is a relevant benefit. R1 will have a relevant benefit of 1250, G1 will have a relevant cost of something I have mentioned. This can help you in answering the question. In case you are still not able to get to the answer, then you can download the answers from the I'll send a link in the group, so you'll download the answers and then you can look at the detailed answers. So that will be 3 stages. We do some problems in class, whatever we are not able to cover, or you want to practice some more questions, then you practice it, you get to the answer, great. You don't get to the answer, look at the summary of adjustment, and summary of adjustment is something which you can revise the day before exam. You can just go through the summary part to understand what kind of adjustments are there in any different questions. Ideally, when you do your preparation, you should prepare this something called as a summary of adjustment or a library of adjustment, so that you can look at those adjustments day before exam, because before exam you have only limited time to go through. So when you have that limited time, you may want to look at some special adjustments, so that if those gets repeated in exam, you are in a position to proceed. So that is where the summary of adjustments will help you. I'll go to the second topic now. We are done with relevant costing, which was part of chapter 2. I'll go to a topic called as activity based costing. This is extremely important from old syllabus point of view. On an average, 10 marks come from activity based costing. You get once in 2 exams, sometimes twice in 3 exams, so you keep getting questions from ABC. I'll first explain what you do in activity based costing, and then we directly get into problem solving. Now, from a problem point of view, in activity based costing, we will have something called as a traditional method and ABC method. We'll have 2 methods. In a traditional method, what you do is you add all overheads and divide either by labor hours or machine hours. You add up all the overheads and you divide either by labor hours or machine hours and get to know something called as a overhead absorption rate. So entire overheads is absorbed using single absorption basis. You could have learned this at IPCC called as primary overhead distribution, secondary overhead distribution, get the overhead absorption rate and then calculate the cost of the job. So what you do first is, in step 1, you will calculate something called as overhead absorption rate as per the traditional method is concerned. After calculating the overhead absorption rate, you will calculate the cost of the product from a traditional system point of view. After doing the traditional system, we will shift to ABC. In ABC, this overheads will become OH1, OH2, OH3, OH4. You categorize into multiple overheads. And the base will become DLH1, DLH, not direct labor hours technically. For some expenses, the base could be number of production run. For some, it could be number of receipts. So we have a format. I'll explain the format as I do the question. But basic rule, what we do here is, we have a traditional system where we'll calculate the cost. Then we'll follow an ABC system, we'll calculate the cost. If the question asks for a comparison, we'll do the comparison, otherwise we end at that stage. So a traditional method, then a ABC method, then a comparison may be required. ABC is considered to be a superior method for cost computation because you look at different bases for absorption. So that is considered to be a superior method as compared to the traditional system. So I'll directly get into problem now. This is sufficient from an ABC point of view. The only thing which you need to know is, first you will have to calculate the traditional system. The problem will go through 5 working notes mostly. Working note 1 would be OAR under traditional system. Working note 2 would be cost of the job under traditional system. Working note 3 would be OAR under ABC. Working note 4 would be overheads under ABC. And then working note 5 is cost of the job under AB. So you normally will do these 5 steps and get to the cost of the job. Certain problem, they may remove the first 2 steps and say that just to do ABC, don't do traditional. You just focus on the ABC calculation and let's not do the traditional computation. Let's get to this now. Page 49. Go through question 3. Go through question 3. Go through question 3. Okay. Now coming to this question, this is only on activity based costing. The last part of the question says calculate total overhead cost per unit of each product using activity based costing after finding activity wise overheads allocated to each product. In fact, they just want the overhead cost. We'll do anyway the only overheads is given. They have not given materials. I'll see a problem where we do all the 5 steps. So when it comes to ABC, the first step is calculating something called as a cost driver rate. We don't call it as overhead absorption rate. Working note 1, cost driver rate under ABC. Cost driver rate under ABC. Cost driver rate under ABC. You could have learnt it in different formats. You can follow them. Are this? I use 5 columns: activity, total cost, cost driver name, cost driver quantity, cost driver rate. Activity, total cost driver name, cost driver quantity, and cost driver rate. Activity, total cost driver name, cost driver quantity, and cost driver rate. Now, these are the 4 important activities as far as the question is concerned: setup, store receiving, inspection, material handling and dispatch. Material handling and dispatch cost is available, inspection is available, store receiving is available, setup is available. Apart from that, I also have this one more cost: machine operation and maintenance. If this is also one more activity, then I can write it as part of activity. End objective is you have to find the cost driver rate for all of this. What the question says is machine operation and maintenance should be apportioned between setup, store receiving and inspection in the ratio of 4:3:2. That is, I'll do it here itself. The 63,000, no, they are saying make it 0. Make the 63,000 0 and give 4/9 to setup, 3/9 to store receiving and 2/9 to inspection. They are telling to distribute that cost, because in the end I want a driver for every cost. So ideally I would want only these 4 costs. I don't want anything more than this. I want only 4 costs. Some question, if they don't give you this data point, let's assume, then machine operation and maintenance will also be an activity, and for that the cost driver will be machine hours. I don't have information, so I will write the information which is machine hours in case they don't give you data point. So what we will do is, I am skipping a step here. I normally have to do a step and calculate the cost. So the setup cost will become 20,000 plus 4/9 of 63,000. 4/9 of 63. Then store receiving will become 3/9 of 63,000. Inspection will become 2/9 of 63,000. This was only one adjustment. Next problem you will see multiple adjustments will be there, so I'll have to do a separate working note for this. Here it was only a small adjustment. So we are going to write now in activity, write set up those 4 activities which they have mentioned: setup, store receiving, inspection and material handling and dispatch. Setup, store receiving, inspection, material handling and dispatch. These are the 4 activities of the company: setup, store receiving, inspection, material handling and dispatch. When it comes to the cost, setup is 20,000 plus 4/9 of 63,000. 4/9 of 63,000. 3/9 of 63,000. 2/9 of 63,000. And material handling and dispatches 2592. Material handling and dispatches 2592. Now, if question doesn't give you a cost driver, you will have to find out what can be an appropriate cost driver. If question gives you, we write that cost driver. So the cost driver is number of production runs. For a setup activity, it can be number of setups also. If the question was silent, we'll see what data point is relevant. Here it is number of production run. Store receiving is requisition raised, again number of production runs. Inspection can be based on inspection hours also. It can be based on inspection hours. Material handling is orders executed. Material handling is orders executed. So every cost we find a basis. In overheads, in traditional system, you would add all of this and have only one single denominator. Here you have multiple drivers for multiple cost. Read the question and tell me how many production runs for all 4 products put together. What will be the number of production runs? The products are usually produced in production runs of, yeah, so this is 720 divided by 24, 600 divided by 24, 480 divided by 24, 504 divided by 24, and you will add them. Basically, products are produced in production runs of 24 units. So you divide by 24, or you add up all and then also divide by 24. Net, I'll get to the rate. I'll get to the overall production runs. Products are usually produced in production runs of 24 units. How much is the production runs? 96. Stores receiving, how many requisitions are there? Number of requisition raised on store is 50 for each product. We have 4 products, so there are totally 200 requisitions. 200 requisitions. Again 96 production runs. 200 requisitions, 96 production runs. Orders executed is 192, and they're saying each order is for 12. Like we divided by 24, here I should technically divide by 12. Every product I have to divide by 12. The overall number is given in the question. They have given the overall number is 192. And CDR is second column divided by fourth column. Total cost by cost driver quantity. Now, what ABC is technically doing is, if somebody says that I have to manufacture a product, you will say it needs half kg of raw material at the rate of 200, it needs 1 laborer at the rate of 500. Like that, you can go to the extent saying that you will need 1 setup at the cost of 500 per setup, because if you do 1 production run, you will incur 500 rupees. You are trying to make everything to be a variable cost. So if I have to produce 100 units, I'll say 100 units will need 2 production runs. The cost is 2 into 500. 100 units will need 5 requisition, cost is 5 into 180. 100 units will need 2 production run, inspection cost is 2 into 250. 100 units will need 4 orders executed, 4 into 13.5. So you are indirectly trying to make everything as a variable cost. That's what you are trying to make everything to be a traceable cost to the end product. So when you are doing any planning or anything which you have to do for the next year, or you have to do cost analysis, it helps you in identifying the real reason for a cost being incurred by the company. Any doubts on this? Working note 2, apportionment of overheads. Apportionment of overheads under ABC. Apportionment of overheads under ABC. You will need 9 columns. Particulars. 8 columns are 4. How many products are there? Sorry. 4 products will need 2 sub columns each. So product A 2 column, product B 2 columns, product A. You will need 2 sub columns here. Product B, product C, and product D. The 2 sub columns are CDQ and amount. Cost driver quantity and amount. That will be the sub columns for every product. CDQ and amount. Cost driver quantity and amount. Particulars for products with two sub columns. The format is going to remain same. Any problem I do, I'll end up writing the same thing. CDQ and amount. What we will do is, whatever was activity here, you'll copy paste. You'll copy paste the activities from there. Whatever are the activities, you end up copy pasting them. You'll end up copy pasting them. Now, what I want to know is, the setup activity, the driver was production runs. How many production runs were there for only product A, which is 720 divided by 24. 720 divided by 24. So production runs for this product alone is 30. Product B is 25. Product C is 20. And last product is 21. You just focus on how many production runs are there. Store receiving, what is the driver? Requisition raised 50, 50, 50 and 50. The one important rule is, all this 4 will add up to the CDQ overall there. It will add up to the CDQ there. So 50, 50 and 50. We have written the CDQs for the 4 products. Like this you can keep doing it. Listen, once we are done with this, what we will do is, we'll take this 30 and multiply it with the CDR which we had calculated, which is 500. You will multiply it with the CDR. So what we will end up doing in this step is 30 into 500, 25 into 500, 20 into 500, 21 into 500. Similarly, what is the cost driver rate for the second activity? 50 into 180, again 50 into 180, 50 into 180, 50 into 180. Like that you can keep writing the CDQ. Do the multiplication with the CDR which we have calculated earlier. Complete this, I'll come in 2 minutes. This will be your cost figure. One check which you can do once you have completed the cost calculation is the total of 4, which is 110,592. When I put a total, I get 110,592. It will match with this total. The total of these 4 overheads, whatever is the total cost as per working note 1, that total and the cost of 4 products will match. The question's requirement is calculate the total overhead cost per unit. So we'll divide by the number of units and get the overhead cost per unit. So next line, this is the total overhead cost. Total overhead cost. Any doubts on this? Number of units and cost per unit. Number of units is 720, 600, 480, 504. This will be the cost per unit. I've done 2 decimals. You can even do 4 decimals. This will be the cost, overhead cost per unit for the 4 products. Any doubts on this? Clear? 44, 47, 51 and 50. Any doubts on this? Okay, we'll try to do a problem where all steps are done. This was a problem where only the ABC part of overheads is done. Okay, let's look at question number 4. Go through that question. Go through question 4. Go through question 4. Quickly read through question 4. Okay, I'll first start explaining it and then we get to the solving. In the past, I've been using a single overhead recovery rate based on direct labor hours. These are the expenses I incur. Now I'm thinking I'll introduce ABC, and in ABC these are the activities I have decided on: receiving material, setting up machine and quality inspection. These are the 3 activities which I have decided. If you look at the cost, it says machine operation, machine maintenance, technical staff and store staff. The expenses name and the activities seem to be different here. So somewhere this will help you in doing the distribution. Whatever those salaries are there, you will have to first distribute like we did plus 4 by 9 plus 3 by 9. Here it is going to be extensive calculation. So we'll have a working note to do that. Get to the cost of the activity. Once you get it, activity, total cost, cost driver name, cost driver quantity and cost driver rate. This is the data point on overall cost. Now I'm going to do analysis for product P, product Q. There can be a problem where they give data on all products. There can be a problem where they give data on only selected products. If they give you data on all products, the total overheads will match with the total overhead of the 4 products like the previous question. In this question, it's not going to match because this company has some 40,000 labor hours, whereas these 2 products put together has only 960 plus 100, which means there is another product R, product S, product T. You have multiple other products whose data I don't have. So in this question, I cannot do the check saying that the total overheads matches with the total overhead of the product. That checkpoint is not possible. They are asking P and Q using existing system, which will have 2 steps. ABC will have 3 steps, and they're asking some component case analysis, which is an extra data they have given. So we are going to do those 5 steps here. The same analysis you will do in any other problem. Working note 1, OAR under traditional system. Working note 1, overhead absorption rate under traditional system. Overhead absorption rate under traditional system. Particulars calculation amount. Particulars calculation amount. Overhead absorption rate under traditional system. Particulars calculation amount. Point number 1, budgeted overheads. Budgeted overheads. We use the word budgeted overheads because normal understanding is you do it for a future. Even if you are doing it for the past, we'll use the same word and put the total of the overheads. So budgeted overheads is total of these 4. The total of these 4 items, I just add them and make it a single cost. I don't distinguish between multiple categories. I just add and make it as a single item. What's the total of this? How much? 21 lakhs. Budgeted overheads 21 lakhs. Suitable base. Budgeted overheads is 21 lakhs. Suitable base. Suitable basis, you have to decide what is the basis. It can be machine hours, can be labor hours. In this question it is direct labor hours. You just write the name of the base. Suitable basis, it's technically what is the cost driver. Technically it's cost driver name. The cost driver name is direct labor hours. Point number 3 is budgeted suitable base. Now how you read this is budgeted suitable base is nothing but budgeted direct labor hours. In place of suitable base, the name is direct labor hours. Sometimes you will read it as budgeted machine hours. Sometimes you will read it as budgeted material cost, depending on what is the base. So how much is the labor hours for the company? 40,000. The only thing which you have to be extremely careful in costing is this data is given for half of the year, and this data is also for half only during the period under review. But if this was for 1 year and that was for half year, then you will have to do that adjustment. So be careful about these things because they'll ask you small adjustments hidden here and there. So that data is for half year. This is they have mentioned during the period under review. I could have slightly changed saying that the consumption of activities during the year are as under. The moment you see during the year, you will have to make it half now because that data is for half year. So you will have to be careful about these aspects. They have mentioned during the period under review. I can straight away take the number. So this number is 40,000. This number is 40,000. And overhead absorption rate is budgeted overheads by budgeted suitable base. Overhead absorption rate is, it's technically cost driver rate. It's technically cost driver rate. What I have done is, point number 1 is activity. I don't have an activity technically. That point number 1 which you have written is total cost. Second is cost driver name. Then cost driver quantity and then cost driver rate. I have written it as rows, that's all. I am using different names to it because we normally use the word base and OAR rather than using the CDR word for the erstwhile system. Ideally, I could have done it in this format also. Activity, total cost, cost driver name, cost driver quantity, cost driver rate. Activity, total overheads. Total cost 21 lakh. Cost driver name, labor hours. Cost driver quantity, 40,000 labor hours. Cost driver rate is you divide and get to the rate. The rate is turning out to be how much you said? 52.5 per labor hour. So in the traditional system, if you use 1 hour of labor, you have to pay 52.5 as overheads. That's what this does. The overhead charge is 52 rupees 50 paise. When it comes to ABC, you are not going to only keep it on labor hour. Some would be based on production run, some would be based on inspection, some would be based on materials dispatch. So you have multiple bases instead of keeping it on a single basis. That's the only difference. Working note 2. Cost per unit under existing cost accounting system or traditional system, you can use any name, under existing cost accounting system. Particulars product P and product Q. Particulars product P, product Q. Listen for a minute. Direct material, direct labor, overheads. Now listen, all this calculation either you do for a per unit, and then finally multiply with the number of units. Sometimes you will do it for overall and then divide by the number of units. Finally, I need two numbers, cost per unit and total cost. In this question, this 6,000, is it for a single unit or is it for all units of 15,000? It will be for all units of 15,000 because this 960 labor hours can't be for a single unit because you have totally only 40,000 labor hours. So that 960 given can't be for a single unit of product P because that itself will need 960 into 15,000. In case the question says labor hours are some 10 crore, 20 crore, then I have to make an assumption whether that 6,000 is for a per unit or 6,000 is for all units put together. That's purely your assumption. In this case, I don't need an assumption because 960 cannot be for a single unit. That's not possible itself because you have overall only 40,000 labor hours. So everything is given overall. I'll first do overall calculation, divide by the number of units and get the cost per unit. If everything is given at per unit level, you do everything at a per unit level and then multiply with the number of units. So direct material, you have only, normally you have three categorization: direct material, direct labor, overheads, and you get to the cost. Most of the question only three will be there. Rarely you will see something extra, but most of the times you will have only these three: material, labor and overheads. So particulars product P, product Q, direct material, direct labor, overheads and total cost. How much is the direct material? 6,000, 4,000, 6,000 and 4,000. Labor is 960 into 6 rupees. The labor cost is 6 rupees. That 52.5 is overhead cost, not the labor cost. 6 rupees is the labor cost. It is mentioned here, direct wage rate, 6 per hour. 960 into 6, 100 into 6, 960 into 6 and 100 into 6, 960 into 6 and 100 into 6. Overheads is very simple, 960 into 52.5, 960 into 52.5, that's the rate we have freezed on, into 52.5, 100 into 52.5, 960 into 52.5, 100 into 52.5. This will give you the total cost, number of units and cost per unit, number of units and cost per unit. Let me know if there's a doubt here. Number of units and cost per unit. Any doubts on this? Now our objective is to prepare a similar table under ABC wherein this will remain same, this will remain same, this alone will change. And how will you get this? You will get this by doing this calculation, apportionment of overheads under ABC. So you will do these two working notes and repeat the second working note as working note 5 and call it as cost per unit under ABC. So we have already done these two working notes. Again we are going to repeat that. So we will do these two working notes, get the overheads under ABC, and you will come to this place. You will copy the material cost, you will copy the labor cost. This alone will undergo a change. Overheads can't be 52.5 into the number of labor hours. That is what ABC and this has a difference. Working note 3. cost driver rate under ABC, cost driver rate under ABC, 5 columns, activity total cost, cost driver name, cost driver quantity and cost driver rate, activity total cost, cost driver name, cost driver quantity and cost driver rate. The only challenge here is I don't have the cost directly, so I'll have to do some analysis and come back to this. Activity, total cost, cost driver name, cost driver quantity and cost driver rate. When it comes to the activity, according to this question, these are the activities, so let's write them. Receiving material and component, receiving material and component, receiving material and component, setting up of machine, and quality inspection. These are the 3 activities according to the question. According to the question, the 3 activities are receiving material, setting up of machine, quality inspection. Now what I am trying to do is I need certain figures which will add up to 21 lakhs for these 3. That whatever data they have given in the question, I need that for these 3 activities and they have to add up to 21. Unfortunately, I don't see an item called as receiving material here. I don't see an item called as quality inspection. Maybe some analysis I have to do, and instead of these 4 numbers, I need only 3 numbers, and those 3 numbers should be receiving material, setting up of machine and quality inspection. Any doubts till now? Any doubts till now? Clear? Now leave some 3-4 lines, come down. Particulars. This is an extra working note in this question. Particulars. Particulars, receiving material, setting up of machine, quality inspection. I basically need the cost for these 3 activities and not what is given in the question. Last problem you didn't have that issue because whatever was the activity you had the cost for that, except a small adjustment where you added 4 by 9, 3 by 9, 2 by 9. We just made a small adjustment. Here what I see as activity and what I see as cost has no linkage at all. They have given altogether different names. So I have to do some analysis wherein I get to know the total of this 3 years 21 lakh. The first cost they have given is machine operation, and some data they have mentioned. Machine operation and maintenance should be apportioned between stores and production in 20:80. Stores and production in 20:80. Of these 3 activities, which is stores? Receiving material. Which is production? Setting up of machine. So that machine operation and maintenance, whatever is the 10, 12, 500, 10, 12, 500, 20% I'll write it here, receiving material, stores and production 2080, 10, 12, 500, 20% will come here and 80% will go to this place, 20% will go to receiving and 80% will go to production. 2080, 10, 12, 500, we split in the ratio of 20:80, 20% went to receiving material, 80% went to setting up of machines. Any doubts on this? Any doubts on this? 2080, so whatever that number, 20% went to receiving material and 80% has gone to setting up of machines. What's the next cost they have given? Again same ratio, machine maintenance also 20:80, machine. Now technically what I am doing is a primary overhead distribution, which you could have learnt at IPCC level. Basically you have a cost and you distribute to the various activities. See, the analysis goes through 2 stages. If the question gives you the activity wise cost, then great, I directly do the working note. If they don't give you activity wise cost and they give rent, salaries, then you will have to distribute rent to the activities, distribute salaries to the activity. After doing the distribution, you do the step again. So this is 187,500, again 20:80, 187,500 into 20% into 80%, 20% and 80%. Clear? Third cost, technical staff. Now they're saying technical staff should be apportioned between maintenance, setup and quality inspection. The problem is maintenance is not an activity for me. Maintenance will get further split as 20:80. Maintenance will have to be further split as 20:80. Now listen, technical staff, I'll split this into two maintenance, two others, two maintenance and others. Listen for a minute, two maintenance and others. Maintenance will take away 30:40:30. Maintenance will take away 30%. Setup will take away 40%. Quality inspection will take away 30%. So to maintenance is 30%. Others is 70%. Listen for a minute. Listen. 30% of 6,37,500, whatever number you get, 30% of 637,500, whatever number you get, split that as 20:80 for receiving and setting up. Split that as 20:80 for receiving and setting up. Balance number 40% to 40% to setup and 30% to quality inspection. So that is straightforward. I don't have an activity called as maintenance. So whatever goes to maintenance will further go to receiving and setting up. It will further go to receiving and setting up. So 637,500 into 30% into 20%. 637,500 into 30% into 20%. 637,500 into 30 into 80, 20% to receiving, 80% to setting up. Balance 637,500 into 40% goes here. The only thing is, once you are done with this, just check whether you get 637,500 for all put together. Your entire distribution is 637,500, just check that part alone. All put together, we should distribute 637,500. Any doubts on this? Clear? Any doubts on this part? What's the last expense? Wages and salaries of store staff. They have not given any data. Stores will go to which activity? It will go to receiving material. Store staff receiving is 262,500. 262,500. Any doubts on this? If you don't have information on operation and maintenance also, then I have to decide which activity it will go to. I need some basis of taking the cost. You would have learnt in primary overhead distribution how you distribute cost to the various departments. So somewhere something has to be done. So total cost is this, and this should add up to 21 lakhs. This should add up to 21 lakhs. Earlier 21 lakh was 4 costs, now 21 lakh is 3 activities. Now 21 lakh is 3 activities. Earlier it was 4 different costs, now it is 3 different activities. Any doubts on this? Any doubts on this part? Clear? Now I go back to the earlier working note. My receiving material will have a cost of 5,47,50. Setting up will have a cost of 13,68,000, and quality inspection has a cost of 191,250. These are the 3 costs. Question did not give me this data. That was the only problem. If they had directly given this data, I would have copied the same number. I would have copied those numbers directly. They did not give this data, so I had to convert and make it in this stage. So I have calculated the cost for the 3 activities, which is receiving material, setting up of machine and quality inspection. Any doubts on this? Any doubts on these 3? Now, any doubts till this? What should be the cost driver for receiving material? material and component consignment received, because their job is to receive material, so you can call it as consignment received, consignment received, consignment received, consignment received. How many consignments are received at an overall company level? At a company level is 1960. That is P and Q put together is 100, 48 and 52. I'm not going to add P and Q because there are more other products in the company. You have product R, you have product S, you have product T. So what we are going to do is only the overall company number. Earlier problem we added it because those were the only 4 products. So they have given material and component consignment received from supplier is 1960. So the CDQ is 1960. You divide and get the, you can keep it as 4 decimal. So every consignment I receive, the overhead cost is 275 rupees. For every consignment, the overhead cost is 275. So if some product needs 10 consignments, cost is 10 into 275. For every consignment, the cost is 275 rupees. Any doubts on this? Setting up of machine, what should be the cost driver? Number of production setups. So number of setups, number of production setups. Again, at the overall company level, how many setups are there? 2040, and the rate is 670.5882. Every manufacturing setup you spend 670 rupees. For every manufacturing setup, the spending is 670 rupees. Quality inspection is number of inspections carried out, number of inspections, which is 1280, and the cost is 149.4141. 149.4141. Any doubts on this? Any doubts on this part? Clear? Now in my next working note, I'll calculate the overhead cost for P, Q. I'll also bring this component K. I'll explain component K in some time. I'll also bring something called as a component K. So you're going to calculate overheads for product P, product Q and product K, because they want some sales value analysis. Analysis is very simple. What you will do is particulars, product P 2 subcolumns, product Q 2 subcolumns, and product K, which is an extra product, again 2 subcolumns. So let's do that. Particulars. Next, working note 4 is apportionment of overheads. I have done working note 3 and working note 4 in the earlier problem. I am repeating that here now. Working note 4, apportionment of overheads, apportionment of overheads, apportionment of overheads, product P, product Q and product K. 3 products, product P, product Q and product K. Rules remain same. The activities should be whatever is here. I copy paste those activities. Basically the activities will remain same. Receiving material, setting up of machine, quality inspection. Receiving material, setting up of machine and quality inspection. Again, this is a very simple area. ABC becomes a a very simple area from an exam point of view. It's a scoring area. Receiving material, setting up quality inspection. What was the cost driver for receiving material? Number of consignments, 48, 52 and 20. 48, 52 and 20. 48 consignments received for product P. 52 consignments for product Q and 20 consignments for product K. 48, 52 and 20. Setting up of machine, how many production runs are there? 36 36, 24, 6, 36, 24 and 6. How many inspections? 30, 10. Now you'll end up multiplying with the rates which you have decided on. You can round off post calculation. You'll have to multiply with the rate which is already freezed. We have already frozen the rate. I have the quantity, I'll have to multiply with the rate. The quantity is already fixed, the rate is fixed, so our job is just to do a multiplication at this stage. More of calculator's job. Any doubts in this? This will be the total overheads figure. Any doubts in this? Working, can I proceed? Any doubts in this? Working note 5, cost per unit under ABC. Cost per unit under ABC. I'll come to product key analysis in some time. I'll copy paste this. Cost per unit under ABC. Your material and labor will remain same, overheads alone you will have to change. Cost per unit under ABC, material and labor would remain same. You will end up changing the overheads number. Cost per unit under ABC, we will write the same material cost, same labor cost, overheads alone will undergo a change. So the overheads figure is material and labor would remain same, overheads will undergo a change, and you will, whatever is the earlier working note telling, you will write those numbers. Material cost, labor cost would remain same. Overheads is something which you have calculated and you end up writing that number. Same number for material cost, labor cost, overheads is something which is going to change, and you end up writing the number which you have calculated in the earlier working note. Which you have calculated in the earlier working note. Any doubts on this? This is what ABC is all about. You will end up doing these 5 steps if it's a comprehensive complete question. Sometimes they will split and ask you only few steps out of it. Net, these are the things. Some question can have some extra adjustment, some lesser adjustment, but net, these are the 5 steps which needs to be done. Any doubts on this? Okay, they've asked one more thing, which is calculate the sales value for component K using activity based costing. Now listen, they have given some data of a new product which is component K, and I have to fix the sale value. Sales value is going to be cost plus some markup. So I'll have to do the cost calculation. Cost is material, labor, overheads. Overheads is already calculated. Otherwise, we will have to now do the overheads calculation, because I need the overheads to be those 3 different items. So material cost, I'll take it. Labor cost, I'll take it. Overheads is computed. And if I have some other cost, I'll write them. Put a total of the cost. Add the profit margin, and that's the sales value for component K. Here, they have not asked the cost calculation. They have went ahead and asked the sales value. To do the sales value, I'll have to first get the cost. To get the cost, I need the overheads, and overheads is something which is already calculated here. Overheads for product K is 13,128. We have already computed that number. Any doubts on this? Any doubts on this? Last working note. Sales value for component K, particulars calculation amount, sales value for component K. We'll see if there is something else. These three are there in all question: material cost, labor cost, overhead cost. Sales value for component K. What's the material cost they mentioned? 12,000. Labor cost 300 into 6. Overheads is 13,128. Overheads number is 13,128. Any doubts on this? Any doubts on this? Apart from this, I have this design cost is 60,000 for 24,000 units. In a quarter you are selling 3,000 units. If somebody tells do relevant costing and analyze, design cost is 0. If somebody tells me to do relevant costing, design cost is 0 because it's already incurred. I cannot do much about it. If I have to do analysis from a relevant costing point of view, the value of design cost is 0. Here they have incurred this 60,000. I'm going to apportion it over 8 quarters. How 8 quarters is 3,000 per quarter, and overall supply is 24,000. This is an extra cost for the company. So design cost 60,000 divided by 24,000 into 3,000. 60,000 divided by 24,000 into 3,000. Total cost, add profit, and you get to the sales value. Total cost, add profit. This is the total cost. What's the profit margin they have mentioned? This will be the total sales value, 43,035. If they ask per unit, we'll divide. Yeah. No, so that is a rate which you have calculated. So when you calculate the rate, what we have ended up doing is total cost for a half year divided by the cost driver quantity for a half year at a company level. That rate, whether you do for 1 year, see, that is the rate to be multiplied with the cost driver quantity. Now, if you want to do a cost calculation for 1 quarter, you should take the cost driver quantity for 1 quarter. So product case, where is the consistency needed is at this place. You should be consistent on total cost and CDQ at a company level. At a company level, both should be half year. Now, some product you can do analysis for 1 day also, 1 month also. The basic objective is this is the rate to be charged if you use 1 consignment. This is the rate to be charged if you use 1 setup. So my final sale value was 43,035. Now beyond this, they can ask for price. If they ask you extra data, you can keep capturing it. But net, I am going to charge 43,035 as the sale value. This is a comprehensive ABC problem. Now I'll be picking and choosing few problems, and I'll do only some adjustments which is needed. Balance part I'll not discuss it. This is a comprehensive problem on ABC. You end up following these 5 steps. Step 1, traditional OAR. Step 2, apportionment of calculation of cost under traditional system. Then cost driver rate under ABC, distribution of overheads under ABC, cost per unit under ABC. Working note 2 and working note 5 is same except for the overhead figure. Any doubts on this? Any doubts on this part? I'll come back to few questions later on. Okay, let's come to this question. Come to question 13. Come to question 13. Come to question 13. Let's end up doing all the 5 steps again this question. This is a reverse working kind of a problem. I'll stop at some stage. I'll stop at maybe working note 3 or something. But from working note 1, we'll end up doing it in detail. Just go through this. Okay, I'll first explain the question. This company is producing 3 products, PQR. I have been given the data of PQR. They have said overheads are absorbed at the rate of 60 per machine hour. The rate is already given in the question. The overhead absorption rate is given, but I don't know what is the overheads number itself. I know the rate is 60 per machine hour. Working note 1, we say computation of OAR. I'll use the same format, but my working note 1 will be computation of total overheads. Point number 1, budgeted overhead, suitable base, will write everything, but we'll go in the reverse order and get to know the overheads number. Once you get to the OAR, they're asking cost under traditional costing method. In traditional costing method, material cost is this, labor cost is this, overheads is this, whatever the 60 per hour into these numbers, and that will give you the cost per unit. If you want the total cost, multiply with the number of units. Then I'll shift to traditional method. In traditional method, these are the activities. These are the cost driver name. The total cost will depend on working note 1 figure. In working note 1, you will get an amount. That amount into 25% is the store receiving cost. That amount into 20% is the machine setup cost. Number of requisitions will be here. If you see this, you will put a total, get to the cost driver rate. After getting to the cost driver rate, we will apportion the overheads to the different products and then calculate the cost per unit under ABC method. So, same 5 working notes. In working note 1, you don't calculate OAR, you calculate the overheads. That's the only difference. Working note 1, computation of total overheads. Working note 1, computation of total overheads. Computation of total overheads. Format remains the same, you can write those 4 items. Computation of total overheads. Format remains the same, budgeted overhead, suitable base, OAR. Just that I'll fill it in the reverse order now, that's all. That's the only difference. We're going to fill this table in the reverse order. Budgeted overhead, suitable base, and OAR. What's the OAR given in the question? 60. What was the base? What was the suitable base in this question? Machine hours. The suitable base is machine hours. Now I want budgeted machine hours. That is, budgeted machine hours is going to be 36,000 into 0.5 plus 48,000 into 0.4. I'll have to calculate the machine hours at a company level. Good part is there are only 3 products. So in the calculation column 36,000 into 0.5, 48,000 into 0.4, 96,000 into 0.3, 36,000 into 0.5, 48,000 into 0.4 and 96,000 into 0.3. How much? 66,000. And in the reverse order, this number is going to be 39,60,000. This number is going to be 39,60,000. I end with this. I'm not going to do beyond this. You will complete it at home if you want to get to the solution, because beyond this what you are going to do is cost per unit under traditional system, CDR calculation under ABC, apportionment of overheads under ABC, cost per unit under ABC, and they finally asked difference in cost due to adoption of traditional. You put the cost under ABC, cost under traditional, and whatever is the difference in cost they want you to calculate it. Any doubts on this? Beyond this, it's going to be repetition of those steps, so we are not going to get anything out of it. So I end with this. Any doubts on this? Any doubts on this? Let's come to this question 15. Question 15. Go through question 15. Okay. Okay, I'll explain the question and then we start doing it. There are two divisions, passenger division and cargo division of an airline. What they used to do in the past is the service department charge. Technically, service department is the overheads of that. What they used to do is overheads were allocated on the basis of revenue. In case you want to follow those 5 steps, my working note one is OAR computation. Budgeted overheads is total of these 3. Suitable basis revenues. Suitable basis revenues. You can have any suitable base. Like we had machine hours and labor hours. Here the suitable basis revenues. And what they used to do is based on revenues, they used to distribute the cost. The revenues of both the divisions are same. That is why you see all the cost being same under the both the division. So the service department rate for the service department cost was based on revenue. Since the revenue of both the division are same, the charges to both the division turned out to be same. Does the income from operation for the two division accurately measure performance? Prepare the divisional income statement using activity based costing, using activity basis provided above in revising the service department charge. So the traditional method P&L is given to you. Instead of a cost calculation, they have given a P&L. We'll end up writing this is not the right way of doing, this is inaccurate. Why it's inaccurate? Because activity based costing helps in better tracing the cost. So some pointers on that you will write, and then you will re-prepare the statement. When you re-prepare the statement, training cost will be distributed on what basis? Number of personnel trained. Flight scheduling based on number of flights. Reservation based on number of reservation requested. In case you want to follow the steps exactly as ABC, then you will have to write activity, total cost, cost driver name, cost driver quantity, cost driver rate. Activities training. Total cost is 6,40,000. Cost driver name is personnel trained. Cost driver quantity is 1000 and cost driver rate is you divide and get to the number. That is a longer way of doing the problem, because in this question I'll take the figure and split it in the ratio of 200 is to 800. Indirectly, whatever you do in ABC, what you have done here, If you see this question, you took the setup cost of 48,000 and split it in the ratio of 30 is to 25 is to 20 is to 21. That is what we have indirectly done. We have just split the cost in the ratio of 30 is to 25 is to 20 is to 21. Somebody says that I am not going to do this step and I'll directly do this. Go ahead and do it. There's nothing wrong. Just that you will have to distribute that cost properly. You will have to distribute the cost in the ratio of 30 is to 25 is to 20 is to 21. That's one challenge. Second is, if you have problems like this where the entire data is not given, then you cannot be dividing the entire cost only to two products, because if you end up dividing to only two products, you will end up estimating the wrong number. This format will be useful in any kind of a scenario. So the only thing is, it will take more time to complete. Any problem you give, I can end up doing it in this format, just that it's a time consuming job. So depending on the question, I can even end up using a shortcut. Shortcut is very simple. Whatever is the cost, on what ratio do you distribute? Clear? Any doubts on this? So now write working note 1, income statement under ABC. Income statement under ABC. Income statement under ABC. Under ABC, particulars and 2 division, particulars and 2 division, cargo and passenger. Now, be it traditional, be it ABC, they are not going to intervene if cost is directly allocated. Like operating expenses and revenues, ABC will not have any say. Operating expenses is for that division, material cost is for that division, labor cost is for that division, design cost is for that division. ABC will not have any say there. ABC comes into picture where cost is not directly traceable. So first two items will remain same, revenues and operating expenses. Revenues less operating expenses, revenues less operating expenses, 42 lakhs, 36 lakhs and 28 lakh 50,000. At this stage, ABC is not going to come in. ABC comes when you have your overheads. So less service department. Service department is technically indirect cost or overhead cost. Service department charges. Service department charges. This is a very simple question. Training, flight scheduling. If I want, I can do it through those steps also. Getting to a cost driver rate, which is going to be a time consuming task. You will end up spending more time. Training, flight scheduling and reservation. Training is 6 lakh 40. What is the ratio? Into 2 by 10, 8 by 10, 2 by 10 and 8 by 10. Split in the ratio of number of personnel trained. Flight scheduling, $3 lakh divide by 600 into 350 into 250, 350 and 250. Reservation is, it will directly go to only 1. There is no need for reservation request in cargo. That's what the question says. And you get the profit. I'll call it as income from operations. $2,97,000 and $5,03,000. If I have to do comparison, I can just put a subtraction of this and get a number. What is the income under operation under the traditional system, and then give some comments if needed. 297 and 503. The overall profits will not change whether it is ABC or traditional. The problem is, if you follow traditional, you will make wrong decision for future. What is the, see, the crux of costing is if you have right data, you will make a right decision. If something has already happened in the past, whether you follow ABC or you follow traditional method or you follow any other method, the cost cannot just change. The cost is going to remain same. Profit is going to remain same. The overall profits, be it traditional method or be it ABC, it's going to remain same. Now, where does the change happen is, looking at this data, I find passenger division is more profitable. If in traditional, maybe the cargo is more profitable, I am yet to do the analysis, but in the traditional system, something else can be more profitable. And if that happens, your focus would be on cargo division, whereas in reality, you should focus more on passenger division. So that is where the cost plays a part. If you prepare a right P&L, future decisions can be correct. Past, nothing can happen. So be it any method, in the past, if I calculate, overall profits will be 8 lakh. The overall profits is going to be 8 lakh. That is not going to change. Any doubts on this? $14 is something I'll do it later once I explain you break-even points. Okay, listen, there is this certain questions which are like theory oriented question. I'm not discussing it in the class. You can look at the solution. Only one point which I want to say for theory question is, when it comes to old syllabus, question number 7 would be on theory. It mostly will be an application theory question where they'll say classify the cost into 4 types of quality cost, classify the cost into 3 measures of TOC. That type of questions will come in exam. Even if they don't ask you reason, you write the reason in exam. Why I am saying that is, looking at an expense, you will learn when I do TQM, I can classify something as prevention, I can classify that also as appraisal. You will learn this in total quality management. That depends on what assumption I am taking. So my answer can be prevention cost also, my answer can be appraisal cost also. So when I write in exam, I'll write the category and I'll write a reason why I am categorizing it that way. End up writing the reason even if it's not asked in the exam, unless it's very clear, you don't have any ambiguity, because when I do a problem, I'll tell you an answer, and when you look at the institute material, it could be an answer other way around also. It depends on what is the reason. You will see that extensively in balanced scorecard. There are some perspectives in balanced scorecard where the answer will change based on the assumption you take. How do you see that item? So unless you write the reason in exam, I doubt whether, because then they'll check whether the answer is matching with the key. Sometimes it can match, sometimes it need not match, because the answer can be even any of the 3. In the perspectives, out of 4 perspectives, any 3 can be the answer, any 1 out of 3. So if you give a reasoning behind your solution, there's a high probability that you will get the marks in exam. Also for old syllabus, the paper is going to be extremely lengthy. So because it's extremely lengthy, you will be forced to answer question number 7. As a strategy to complete paper, you should focus on question number 7. Question number 1, try to answer this 36 marks in the first 40 minutes or so, and then you can end up focusing on other set of questions, because the paper will be extremely lengthy, completing it will be tough. In new syllabus, paper completion is going to be simple, so it's not going to take much time. Already the question is lower by 1, and on top of that, if it's a practical problem, they don't ask it of till now whatever questions have come, they are not of that difficulty level. The difficulty level for new syllabus questions has been on the lower side, practical questions. Case studies have not been tested till now, only one attempt they tested some 30 marks case study. Ideally it should become a 40-60 mix, 60 for problems and 40 for case studies. So once that happens, I assume the problem type questions could still be on the simpler side. So the one issue with AMA is completing the paper for old syllabus. You will face that issue. So to avoid that issue, you will be forced to answer the last question. It could be a direct theory question, or it could be a classification type of a question. Whatever be the question, try to answer that, because answering the 7th question will not take you more than 12-13 minutes. Answering any other normal question will take you half an hour. Any question which you do in between, unless you are extremely confident on all the question, you end up doing it. But in case you are not, any new problem which comes in AMA will take you some time to tackle it. So if you have seen it earlier, you can easily end up doing it. Any new problem will take you time to tackle it. So to avoid that issue, be very clear that question number 1 mandatory to be attended. Question number 7 is something which will help you in saving time. This 2 question, if you answer in 40 minutes, you will end up having 140 minutes for balance 64 marks. So there you can try to tackle this question. So important part is you can go through whatever the past questions which is there in the material. Some application theory I'll discuss. ABC, there is nothing much on the application theory part. But if you have to answer an application theory question, please give reason for your solution unless it's very clear. I'll tell you areas where it will be extremely clear. There are a lot of areas where there will be ambiguity. Whenever there is an ambiguity, write reason for your classification. It can be even from a new syllabus point of view, because case studies are going to come in. Some classification oriented question can also come in. If they ask you, even if reasoning is not asked, end up answering with the reason. Because the solution, because when I discuss, I'll say prevention cost because this, appraisal cost because this. Now you will have to bring that in your answer paper, because when I'm talking, I can give you all possible answers saying it is prevention because of this reason, it's appraisal because of this reason, it's internal failure because of this reason. So I can keep giving you a single item as different categorization based on the logic behind the answer. We'll discuss questions on break-even point later on. Just a minute. Okay, we'll do one more question in ABC. Let's come to question 5. Come to question 5. ABC is predominantly only that one problem where you have 5 steps. Beyond that, it's end up repeating those steps in multiple other forms, but it's only those 5 steps. You don't have anything beyond that in activity-based costing. Go through question 5. Okay. Now coming to this question, they've given data on the company. They've asked sales, cost of goods sold is given. Following is in respect of operating cost other than COGS. Now activity, total cost, cost driver name. You will have to add 2 more columns called as cost driver quantity and cost driver rate. So somehow you'll have to get the CDQ and CDR, get the rates, apportion the overheads, and then finally prepare profit statement. Calculate the operating income of each distribution channel for the quarter ended using activity based costing. Let's first do working note 1, which is cost driver rate under ABC. Working note 2, apportionment of overheads under ABC. Working note 3 is normally cost per unit under ABC. Here it's profitability statement under ABC. Working note 1. Working note 1, cost driver rate under ABC. cost driver rate under ABC, activity, total cost, cost driver name, cost driver quantity and cost driver rate, activity, total cost, cost driver name, cost driver quantity and cost driver rate, activity, total cost, cost driver name, cost driver quantity and cost driver rate. Major chunk of is readily available in the question. Our job is just to divide and then get to the answer. Activity, total cost, cost driver name, cost driver quantity and cost driver rate. Let's write the activities. Customer purchase order processing, store delivery, cartons dispatched, shelf stocking. These are the 4 activities given in the question. $591,750, 9,60,000, 792,135, 80,240. Activity, total cost, purchase orders, number of deliveries, cartons dispatched, shelf stocking, shelf stocking. Any doubts on this? How many purchase orders are there for all products put together? 13,000, 13,150, 13,150. Purchase orders put together is 13,150. Deliveries is 960 plus 2, 2470 plus 8570. Let me know if there's a doubt here. 13,150, and it's a very simple step. I could have done it in the question itself. We could have created 2 more columns and written this 13,150 and 12,000. Cartons dispatched. Listen, you cannot add this directly. It says number of cartons shipped per delivery. So if you have to add, it is 250 into 960 plus 75 into 2470 plus 12 into 8570. These are small adjustments which will keep coming in question. So it is 250 into 960 plus 75 into 2470 plus 12 into 8570, because the words used are number of cartons shipped per delivery. So 250 into 960, 75 into 2470, 12 into 8570. 250 into 960 plus 75 into 2470 plus 12 into 8570. Any doubts on this? Same thing will work with shelf stocking hours. You cannot be adding them directly. Number of hours of shelf stocking per delivery. So it is going to be 2 into, again per delivery is mentioned, 2 into 960 plus 0.5 into 2470 plus 0.1 into 8570, 2.5 and 0.1. 0.1, 0.5 and 2. These are the rates: 45, 80, 1.5 and 20. 45, 80, 1.5 and 20. These are the rates: 45, 80, 1.5 and 20. Any doubts on this? Clear? Okay, I'm not doing the step on apportionment of overheads. I just want to focus on profitability because there's one more adjustment there. Let's understand that for every product, how many products are there? Okay, for the time being, my overheads to all the three products is 8,08,000. When I do the calculation, the apportioned overheads total is 8,08,000. I'll focus on the profitability statement. To do apportioned overheads, particulars, CDQ amount, CDQ amount, CDQ amount, and you'll have to put a total. Next, working note 3. Working note 2 would be apportionment of overheads when you do it. Working note 3, profitability statement. Profitability statement. I'm not doing the part on apportionment of overheads because we are not going to learn anything new there. Profitability statement, particulars and 3 product, general supermarket chain, drugstore chain and chemist shops, particulars and 3 products, now it is revenues less cost of goods sold, revenues less cost of goods sold. I technically call this as gross profit if I want, or I can even not show this gross profit. Revenues less cost of goods sold, you get gross profit less operating expenses, and we get net profit. Less operating expenses and we get net profit. Where will operating expenses come? It will come from working note 2 when you do. For the time being, I am writing 8,08,000 equally for all the 3. That's just to explain one more concept. I'll end up writing 8,08,000. Any doubts on this? Any doubts on this? What's the revenue figure? What is the revenue figure? 96,500 into number of deliveries. Please read it properly. It says average sales per delivery. So be careful about these parts. You will keep having hidden adjustments here and there. So revenues is 96,500 into 960. 96,500 into 960 because the words used are average sales per delivery and not some question they'll give you total sales. Some question they'll give you average sales per delivery. So you will have to be careful about those adjustments. 96,500 into 960. This is an extra hidden adjustment again in this question. Into 960. The next one is 32,450 into 2470. 32,450 into 2470. And last one is 6,225 into 8570. 6,225 into 8570. 6,225 into 8570. Into 8570. 94,650 into 960. 94,650. Your cost is again 94,650 per delivery. Some question they can even make it as sales per delivery and cost of goods sold per order. Whatever way they want to make changes, they can end up making it in the question. So be careful when you answer the question. Read it carefully because this depends on how do you read the question. There's nothing new which I'm going to teach. It is just that in a hurry you will end up writing the wrong number. So be careful about those areas. 94,650 into 960. 31,800 into 2470. 5950 into 8570. 5950 into 8570. 5950 For the time being, you can write this as 808042. Everything is going to remain same, 808042. At home, you can do the calculation. You're not going to learn anything new. You can look at the solution at home if you want. I have just assumed that it would be 808042 for all the three. And I get to the net profit. Sometimes the question may ask you to do a ranking. The ranking can be done on the profit as it is. Sometimes you can do profit by sales and calculate the ratio and then do the ranking. Problem is silent, we'll do both. The ranking will be based on net profit. The ranking will also be based on net profit margin, which is net profit by sales into 100. So I can do my ranking based on net profit. I can also do my ranking based on net profit margin, depending on what the question wants you to do. So you can do this ranking if the question asks you. Sometimes they'll ask you rank the various products based on profitability. Any doubts on this? Any doubts on this part? Clear? Go through question number 14. There is something on BEP. BEP something I'll do it later. Go through question 14. Go through question 14. Go through 14th question. There's something on BEP that we'll do it later once we are done with marginal costing. Okay, I'll first explain the question. This is the traditional analysis, 40 rupees of contribution, 50 rupees of contribution. The rule state that is I can produce a total of 10,000 units. I can produce product A if I want, I can produce product B if I want, or combination of two products, but not more than 10,000 units. That's a limiting factor. If I just go by this data, I'll produce 10,000 of B. I'll produce 10,000 of B because that will give me 50 rupees contribution. My fixed cost is 3 lakh. I make a profit of 2 lakh rupees. 10,000 into 50 minus 3 lakh. Now they are saying this is not helping us, so they wanted to analyze the fixed cost, and they have analyzed that A takes away so much of fixed cost, B takes away so much of fixed cost, and 30,000 is pure fixed cost which cannot be segregated. That's a pure fixed cost for the company. Now, how this 40,000 has come is 10 production run into 4,000 per run. 10 production run into 4,000. When it is product B, it is 10 production run, but the rate is, the CDR is different for product A and product B. That's the question says 10 into 4,000 and 10 into 7,500. This is 120 into 500 boxes, 120 per box. So 60,000 is the number, 120 into 500 boxes, and this side is 200 into 125 boxes. That's the rate given in the question. 4,000 for every 2,000 units. So if you manufacture 10,000 units, you will keep incurring this 5 times. So this number is 20,000 and this number is 50,000. Now certain measures have been taken. They are saying number of units per run to some 10,000, some 1,250, some data point is given. Now management says that you prepare a profit statement of 15,000 units of either A, 15,000 units of B, or a combination, that is possible. And now unanalyzed fixed cost increases to 32,000. Based on the principles of ABC, prepare a statement showing the contribution and item wise analyzed overheads. If 15,000 of only A is manufactured or 15,000 of only B is manufactured. So I am required to prepare a profitability statement if only A gets manufactured and if only B gets manufactured. We'll directly get to the profit statement. Somewhere I'll end up using this data to prepare the profit statement. Working note 1, profit statement under activity based costing. Now, even if this question I want to do activity, total cost, cost driver name, cost driver, it's possible, just that CDR is going to be different for two products. The CDR is not same. They are giving different CDR for product A, different CDR for product B. That's the question's information. Profit statement under ABC, particulars, 15,000 units of A, 15,000 units of B. Either I manufacture 15,000 units of A or I manufacture 15,000 units of B. Arrive at the profitability of A and B and then the final profits if 15,000 units of A or 15,000 units of B are manufactured. So two scenarios. In one scenario I manufacture 15,000 of A. In second scenario I manufacture 15,000 of B. In case they want us to fix what combination I have to do, I have to go back to limiting factor analysis. So that you'll learn later on. Based on limiting factor, I'll decide what combination to follow. 15,000 of A, 15,000 of B. Point number 1, sales. Sales. What will be the sale value for A? 15,000 of A is 15,000 into 100. B is 15,000 into 120. 15,000 into 100, 15,000 into 120, less variable cost, less variable cost, 15,000 into 60, 15,000 into 70, into 60 and into 70. I'll not call it as contribution now itself, because what normally ABC tries to do is it tries to convert some of the fixed cost into kind of variable in nature. So we have done till this sales, variable cost. Just a minute. Now I have these three costs: setup cost, distribution cost and step up fixed cost. Step up fixed will write in fixed category. Setup and distribution will now turn to be a variable cost. That's what ABC tries to do. ABC tries to convert a fixed cost into a variable cost. So listen, less setup cost. Now earlier the cost was 10 into 4,000. I will go through the data point and see whether the 10 production run is going to change. Maybe the data points tell me that it will not be 10 production run now, it can be 20 production runs. So I'll have to check that data. They can also say it's not 4,000, it's 3,500 now. So I'll have to see whether it continues to be 10 into 4,000. Now increase in number of units per run to 2,000. How many units we want to manufacture? 15,000. So 15,000 divided by 2,000. 8. I cannot have it as 7.5. Institute sometimes may even leave it at 7.5, but logically 8 is the production runs to manufacture 15,000 units. Earlier it was 10 into 4,000. In place of 10, now it has to be 8. In place of 10, it has to be 8. Have they given anything on this 4,000 also changing? Have they mentioned anything on the setup cost per se changing? Any data point which says the setup cost is going to increase, decrease? If nothing is mentioned now, it will become setup cost is 8 into 4,000. It will become 8 into 4,000. Earlier it was 10 into 4,000. Now it will end up becoming 8 into 4. Technically it is 7.5, but I cannot write 7.5, so I am writing 8. 8 into 4,000. 8 into 4000. Similarly for product B, how many runs will be there? How many runs? It will be 12, then 12 into 7500. It will be 12 into 7500. Earlier it was 10 into 7500. Now it will become 12 into 7500. Any doubts on this? So this number is 12 into 7500. 12 into 7500. Any doubts on this? Any doubts on this number? What's the next cost they've given? Distribution. The basic objective is to convert some of the fixed cost into like a variable cost. That's what we try to do. In fact, setup cost and distribution, whatever you're writing, it's not variable. It's also not fixed. It's technically semi-variable. It's technically a semi-variable cost because it changes at some level. Again, it remains fixed. If you manufacture 1 unit, you have 1 production run. If you manufacture 2000 units also, you have 1. So within 2000 units, it's like a fixed. Moment you go beyond 2000, it becomes a variable. Again 2000 to 4000, it's a fixed. Moment you go beyond 4000, it becomes a variable. So it's technically a semi-variable cost. Now distribution, earlier it was 120 rupees into 500 boxes. 120 rupees into 500 boxes. Read the data point and tell whether the number of boxes will change or that 120 will change. Earlier it is 120 into 500 boxes. Now again it continues to be 500 because number of units per box distributed increases to how much? 30 units. So for 15,000 units you need again 15,000 divided by 30, 500 boxes. The requirement continues to be 500. So this is going to be 120 into 500. 120 into 500. The important part is you will have to distribute the cost here. This I have done it directly in the question. In case you want to explain it, you can write a note and explain in exam. 120 into 500 was the number. 120 into 500 was the number. That side it was 200 into 125 boxes. 200 into 125 boxes. You can tell me how many boxes will be needed now. How many boxes? It will not be 400. 15,000 divided by 125. 15,000 divided by 125. How many boxes? 120. So this side is 200 into 120 boxes. 200 into. In fact, these costs are coming down for the company. The costs are coming down despite units going up. Somewhere some efficiency measures have been taken. Earlier it was 200 into 125. Now it is 200 into 120. They can even go to the extent of changing this 120 per box and say it will become 140 per box. They can change anything they wish to. They can even say it will become 140 per box. What I am focusing on is CDQ and CDR. I have to multiply these two. So I get CDQ, I multiply it with the CDR. Sometimes CDR can change, sometimes CDQ can change. Any doubts on this? Then they have said there is no change to the step cost or contribution. The step up fixed cost was earlier 4,000 into 5 lots. One lot is 2,000 units. Earlier it was 4,000 into 5 lots. Now tell me 4,000 into how many lots would be needed? Earlier it was 4,000 into 5 lots. You will need 8 lots because you have to manufacture 15,000 units. So before this, I'll call this as contribution. I'll call this as contribution. Now listen, here also there is a, some authors will say contribution is this minus this only. Some authors can say the contribution is only sales minus variable cost. Some authors will say no, setup and distribution is also a variable cost because you are trying to get it to a CDQ level and then get the answer. So institute answer can be this minus this is contribution. Sometimes all this deducted can be contribution. So both are possible from a solution point of view. Less step up fixed cost, step up fixed cost. Earlier it was 4,000 into 5 lots, 4,000 into 5 lots. Now it is 4,000 into 8 lots. 4,000 into 8 lots. This side it was 5,000 per lot. How many lots are there now? How many lots? 15 lots. Now one lot is 1,000 units. See, here it was 4,000 per lot of 2,000 units. Here it is 5,000 per lot of 1,000 units. 5,000 per lot of 1,000 units, and we are selling how many units? 15,000. So this number is 5,000 into 15. 5,000 into 15. Any doubts on this? I know some of you look a little confused on this adjustment. 5,000 into 15. Now you can call this as profit before unanalyzed fixed cost. Profit before unanalyzed fixed cost. What is unanalyzed fixed cost is? That will be incurred whether you manufacture A or you manufacture B or you manufacture A and B put together. Unanalyzed fixed cost is something which is not specific to a product. If the company runs, that cost will be incurred. Profit before unanalyzed fixed cost less unanalyzed fixed cost, and last item is final profit. The last item is final profit. How much is the unanalyzed fixed cost? 32,000. That will be incurred whether you manufacture A or you manufacture B. That cost will be incurred in both these scenarios. Break-even point is something I'll explain in marginal costing, because this has something called a semi-variable cost. So how do we do that? You will understand in when we move to marginal costing. So final profit is 4,44,000 and 5,29,000. The final profit figure should match with the institute. Contribution can change depending on how they want to interpret it. How they interpret it will depend on that. With this, we'll take a break of 30 minutes. We are done with relevant costing and ABC. I'll continue with balance areas post break.